Future bungee jump moguls, ready to dive into something a little less thrilling than launching folks off bridges.
Yeah, maybe not as exciting as a bungee, but just as important.
That's right. We're talking corporation tax. Not as scary as it sounds, though, especially with this awesome guide from MA&CO accountants.
Corporation tax for bungee companies, a complete guide. Essential reading, I'd say.
Couldn't agree more. Okay, so basic question. What exactly is corporation tax in the UK?
Well, any limited company in the UK.
Oh, right, of course.
They got to pay taxes on their profits, and that's what corporation tax is. Basically, the government's cut of your success.
So even if your business is all about adrenaline rushes, the tax man still wants his share.
Exactly. Got to register with HMRC, file those yearly accounts, and submit a thing called a CT600.
The CT600, that's where you report all your profits and stuff.
Yep, that's the one.
All right, let's get down to the numbers. Corporation tax in the UK has this tiered system based on, well, how much your company makes in profit.
Makes sense. Different levels of profit, different levels of tax.
So let's say you're just starting out making up to £50,000 in profit. You're looking at a 19% tax rate?
Not too bad, really. Gives you a chance to, reinvest most of your earnings back into the biz. Maybe get yourself a snazzy new bungee cord.
Or some awesome marketing.
Yeah.
Now, if you're doing really well, bringing between, say, 50,001 and 250,000 pounds,
Things change a bit.
the tax rate bumps up to 25%. But then there's this thing, marginal relief. I'll be honest, it kind of confused me at first. Can you break it down?
Sure. Imagine your company's made, say, 60,000 pounds in profit.
Okay, so above that 50,000 pound mark.
Right. Now, without marginal relief, you'd be paying that 25% on the whole 60,000 pounds. But with marginal relief, you only pay the higher rate on the amount over 50,000 pounds.
So just on that extra 10 grand.
Exactly. It stops your tax bill from jumping up massively as your profits grow, makes the transition between those tax brackets a bit smoother.
So it's like a safety net for growing businesses, preventing them from getting slammed with a massive tax bill right away. I like that.
Smart system, really.
Now, if you're making over 250,000 pounds, congrats, you've hit the big time. You'll pay a straight 25%.
High stakes, high rewards.
But hey, bigger profits mean you've got more to invest back into the business, right? Make an even bigger splash. Okay, enough about rates for now. Let's talk about the fun stuff. Deductions.
Ah, yes, the part where we can potentially shrink that tax bill.
Exactly. You can actually deduct certain expenses from your profits. Means you end up paying less tax overall. And some of these deductions are pretty sweet.
Especially for bungee businesses.
Like yours, right? You can deduct all that essential equipment, safety gear, the whole shebang. Harnesses, ropes, helmets, even those regular safety checks on your platform, all deductible.
Makes sense. Safety is absolutely critical in this industry. It's only natural for the government to, well, reward businesses that prioritize it.
Right, it's like a financial pat on the back for being responsible. Now, what about your team? The people who make those jumps happen.
Their costs are deductible, too.
That's awesome. So employee salaries, contributions to their pensions, national insurance, even the cost of all their safety training, that's all deductible. Investing in your team, their skills and well-being actually saves you money in the long run.
And a well-trained team's a safer team. A safer team attracts more business, leads to higher profits.
It's a win-win all around. Can't forget about things like business insurance, those adventure tourism licenses, and any regulatory fees you got to pay, all tax deductible. It's like the government saying, we support responsible bungee businesses.
We want you to succeed.
And here's a good one. Marketing and advertising. Those awesome bungee jump ads you're going to blast all over social media.
Website, online promotions, even influencer marketing.
All deductible. It's amazing.
Investing in your business's visibility, reaching your target audience, building your brand, and potentially saving on taxes, all at the same time.
Pretty slick, right? Okay, before we get too carried away with all these awesome deductions, got to touch on VAT. Value-added tax. Basically, a tax on what you sell.
And it kicks in if you're making over a certain amount.
Right. If your bungee biz makes more than 85,000 pounds a year, you'll have to register for VAT and charge 20% VAT on those jumps and any other services. The good news is you can usually reclaim the VAT you've paid on your business expenses.
Helps balance things out.
Now, there are a few different VAT schemes out there. Standard, flat rate, and margin. Each has its own quirks and benefits.
Figuring out which one's right for you. That's where it gets a bit tricky.
Depends on your business model and, what kind of transactions you're doing. Probably best to do a little research, maybe chat with a tax pro to figure out the best fit.
They can guide you through the maze.
All right. Ready for some seriously cool ways to maybe shrink your tax bill even further?
Let's unlock those tax saving secrets.
First up, the annual investment allowance, or AIA. This is a game changer, especially if you're a business that, well, invests a lot in equipment, like Bungee companies do.
It's like a turbocharged deduction for all that essential bungee gear.
Exactly. You can claim up to £1,000,000 on equipment through AIA.
A million.
So let's say you're buying a brand new state-of-the-art crane for your bungee jumps. Potentially, you could deduct that whole crane's cost from your profits for the year.
That'd make a serious dent in your tax bill.
And it frees up more money to reinvest, upgrade your setup, expand your marketing, maybe even develop some crazy new bungee experiences.
The possibilities are endless.
Now, speaking of innovation, have you heard of R&D tax relief?
Fantastic incentive for businesses pushing the boundaries.
Right. If you're developing new safety tech, like an advanced harness system or some crazy new bungee cord material, you could be eligible for R&D tax relief,
The government's really encouraging businesses to innovate.
especially in a field like bungee jumping. Safety and tech go hand in hand. Okay, let's get a bit more strategic. How about optimizing your business structure? Might sound a bit complex at first.
But it can make a world of difference. It's like choosing the right bungee cord for a jump. The right structure can impact your business's performance, its stability.
Perfect analogy. So, how your business is set up, whether it's a sole proprietorship, a partnership, a limited company, it all affects how much tax you'll owe. For example, setting up a holding company can potentially protect your assets, lower your overall tax burden. Or you could look into optimizing dividend payments to minimize your personal tax liability.
It's about building a strong financial foundation, setting yourself up for success in the long run.
Now for a tip that might surprise you: government grants and incentives. The UK government actually offers funding specifically for adventure tourism.
Including bungee jumping ventures.
Amazing, right? They can help with startup costs, marketing, even research and development.
Definitely worth checking out what's available in your area.
Absolutely. All right, now, while all these tax-saving tricks are super exciting, there are some common bungee jumping tax pitfalls to watch out for, things that can trip people up.
Financial hurdles, better to know about them in advance.
Exactly. So first and foremost, make sure you register for corporation tax on time. You've got 3 months from the day you start trading to register with HMRC. Miss that deadline, and you're looking at penalties, plus unwanted attention from the taxman.
Not ideal.
Next one, pay attention to tax deadlines. HMRC's got strict deadlines for filing your corporation tax return and paying up. Missing them can lead to hefty fines. Mark those dates in your calendar. Make sure everything's submitted on time.
A little organization goes a long way.
All right, here's a big one. Keep accurate financial records. You need to track all your income and expenses like a hawk, not just for tax reasons, but also to really understand how your business is doing financially.
It's like keeping meticulous logs of your jumps, noting what equipment you used, the weather, all the details.
Exactly.
Yeah.
HMRC wants you to keep those records for at least 6 years. So whether it's accounting software or a good old spreadsheet, make sure you're tracking everything.
Every penny in, every penny out.
And finally, be super careful about claiming expenses that aren't actually deductible. The rules can be a bit fuzzy, so it's always smart to check with an accountant. Make sure you're only claiming those legit business-related expenses.
Better safe than sorry, right?
Right. Now, to really see how understanding these tax rules can make a difference, let's look at a case study.
I love a good real-world example.
This is Extreme Heights Bungee Ltd.
Catchy name.
They were paying 25% corporation tax on profits over £250,000. Doing pretty well, but they knew there had to be ways to lower their tax bill. So they got smart. Worked with an accountant to put some savvy tax-saving strategies into play.
Took a proactive approach.
First thing, they invested some of their profits into top-of-the-line safety equipment, and they claimed the annual investment allowance.
Smart move.
Then they revamped their payroll structure, making sure they were maximizing those tax-free allowances for their employees. And to really seal the deal, they went for R&D tax relief for their new safety innovations.
Combining multiple tax-saving strategies, that's the ticket.
And the results were impressive. They cut their tax bill by a massive 30%.
That's a chunk of change they can now reinvest back into their business.
Exactly. Expand their operations, create new bungee experiences, you name it. It just goes to show that a little knowledge, a bit of planning, you can turn those tax challenges into opportunities.
Turn those hurdles into springboards.
Now let's walk through a simplified example. Say you have a hypothetical bungee company making £200,000 in profit.
Okay, let's break it down.
Remember those tax brackets we talked about? Well, the first 50,000 pounds of that profit would be taxed at 19%. Works out to 9,500 pounds.
The initial bite.
Then, for the remaining 150,000 pounds, because we're between 50,001 and 250,000 pounds, our friend marginal relief comes in.
Smooths things out.
You'd pay 25% of that chunk, comes out to 37,500 pounds.
Right. So add those two figures together.
You're looking at an estimated tax liability of around 47,000 pounds.
Significant, but don't forget about those deductions.
That's where the magic happens. By using deductions strategically, like the annual investment allowance, R&D tax relief, all those other ones we talked about, this company could potentially shave another 10 to 20 grand off their tax bill.
What a difference.
Imagine what you could do with that extra cash.
Uh-huh.
Upgrade your equipment, boost your marketing, maybe even open a new location. Just goes to show that with a little bit of savvy and planning, you can really turn those tax challenges into growth opportunities.
Make those numbers work for you. It's all about turning those numbers into, well, bigger jumps.
Okay, now that we've covered the basics of corporation tax and those awesome deductions, let's talk about some of the, common mistakes Bungee businesses make. Forewarned is forearmed, as they say.
Absolutely. Knowing what to avoid can save a lot of hassle down the line.
First one, and this might seem obvious, but got to make sure you register for corporation tax on time. You have 3 months from when you start trading to get registered with HMRC.
It's a legal thing. Can't just skip it.
Missing that deadline can lead to penalties, and nobody wants extra attention from HMRC.
Right. Think of it like getting your bungee jump license. You wouldn't operate without that.
Exactly. Next up, those all-important tax deadlines. HMRC has very specific deadlines for filing your tax return and making those payments. Miss them, and you could be hit with some hefty fines.
Late filing penalties can add up fast.
So get organized, mark those dates, set reminders, whatever works. There are loads of tools and apps out there to help you keep track.
Technology to the rescue.
All right, here's one that often trips up new business owners. Keeping accurate financial records. Got to track all your income, your expenses, everything.
Down to the penny.
Not just for tax purposes, but also for getting a clear picture of how your business is actually doing financially.
It's like a detailed logbook for all your bungee jumps.
Exactly. HMRC expects you to keep those records for at least 6 years. So, find a system that works for you. Accounting software, maybe even good old spreadsheets. Just make sure you're on top of it.
Organization is key.
Last but not least, be careful about claiming expenses that aren't actually eligible for deductions.
Yeah, the rules can get a bit fiddly.
Generally speaking, you can deduct expenses that are, completely for business purposes. But there are some gray areas, so it's always wise to check with an accountant. Make sure you're claiming the right things.
They can guide you.
Think of them as your financial safety net, helping you stay on HMRC's good side. Now, before we wrap up this deep dive into corporation tax, I had a question that I think a lot of people might be wondering about.
Go for it.
What happens if you mess up on your corporation tax return? Make a mistake.
Happens to the best of us, especially when you're dealing with, well, pretty complicated tax regulations.
Right, so is it like the end of the world?
Not at all. The good news is HMRC gets it. Mistakes happen. If you realize you've made an error on your return, best thing to do is contact them as soon as possible.
Fess up.
Exactly. Explain the situation. They've got procedures to help you fix things. They're usually pretty helpful.
So better to be upfront about it than try to ignore it and hope it goes away.
Definitely. Transparency is key.
Speaking of things that can be a bit tricky, we touched on VAT earlier.
Value-added tax? The tax man's always got to get his cut.
It can be a real headache, especially for new business owners. Just to recap quickly, VAT is a tax on the goods and services you sell. If your bungee business is making over 85,000 pounds a year, you got to register for it.
And you'll charge 20% VAT on all your bungee jumps and other services.
The good news is you can usually reclaim the VAT you've paid on your business expenses. Kind of evens things out.
Helps balance the books.
But then there's the whole issue of choosing the right VAT scheme. We mentioned the standard, the flat rate, the margin scheme. Each has its own advantages and disadvantages.
The standard scheme, that's the most common.
Right. You basically calculate the difference between the VAT you've charged and the VAT you've paid, and then either pay the difference to HMRC, or if you're lucky, you get a refund.
The flat rate scheme can be simpler, for some businesses anyway.
Yeah, you pay a fixed percentage of your turnover to HMRC.
Regardless of your actual VAT expense.
Right. And then there's the margin scheme, which is a bit more niche. It's for businesses that are, buying and selling goods.
Like secondhand bungee equipment.
Exactly. You only pay VAT on the profit margin. Figuring out the best scheme for your business, that's where it gets a bit, complicated.
Definitely worth chatting with an accountant or a VAT specialist.
They can give you some personalized advice, help you make the right choice.
Navigate the VA jungle.
Here's another VA tip. If you're offering your bungee jumps outside the UK,
International jumps.
you might not need to charge VAT at all.
VAT generally applies to stuff sold within the UK.
Right. But the rules for international transactions can get pretty complex, so it's always smart to double check, maybe get some expert advice.
Make sure you're on the right side of the law.
All right. Let's move on to something a bit more exciting than VA. Business structure optimization. Might sound a bit technical.
It's really about setting up your business in a way that works for you, both operationally and for, minimizing those taxes.
Yeah, making sure everything's running smoothly and efficiently.
Like choosing the perfect spot for your bungee jump. Got to consider the height, the landscape, all the safety aspects, and the overall experience you're aiming for.
That's a great analogy. When you're starting out, it might be tempting to just go with the easiest option, like a sole proprietorship. But as your business grows, you might want to explore other structures.
Partnerships, limited companies.
Right. A limited company, for example, it offers limited liability, meaning your personal stuff's protected if the business runs into debt.
Provides a layer of security.
And tax-wise, a limited company can sometimes be more advantageous. You can pay yourself a salary, and dividends can be more tax efficient than taking all your income as profit.
It's about finding that balance, protecting yourself, minimizing your tax bill, and making sure your business has a solid foundation.
Okay, let's shift gears to something I'm always excited to talk about. Government grants and incentives. You might be surprised to know that the UK government offers a bunch of funding programs specifically for adventure tourism businesses.
That's awesome.
And that includes bungee jumping. They've got grants for everything from getting started to marketing, even research and development.
It's like a helping hand from the government.
Exactly. Finding and applying for these grants can take a bit of work, but it's totally worth it.
It's free money.
There are resources online, and you can always reach out to your local business support organizations. They're happy to help.
There's a whole network of people out there who want to see you succeed.
Okay, we've covered a ton of ground today, from the nuts and bolts of corporation tax to some, well, pretty advanced tax-saving strategies. But the biggest takeaway is this. Knowledge is power. The more you understand about corporation tax, the better decisions you can make for your business.
Like knowing all about your bungee equipment. The more you know, the safer and more confident you'll feel.
Exactly. So before we jump into some real-world examples of how other bungee businesses are saving on taxes, are there any burning questions about corporation tax that we haven't covered yet? Anything you're still curious about?
I think we've done a pretty thorough job of explaining the key stuff, the essentials.
Great. Then let's move on to those inspiring success stories. I think you'll find them pretty motivating. All right, let's dive into some real-life examples of bungee businesses that are, really nailing their tax strategies.
I love seeing how these concepts actually work in practice. It's inspiring.
Totally. So first up, we've got Jump Masters, a bungee company up in the Lake District.
Ah, beautiful part of the country. And some pretty amazing jump locations.
Right. They were initially struggling with a, pretty hefty corporation tax bill. But then they discovered this thing called the Annual Investment Allowance.
The AIA. It can be a lifesaver for businesses that need to, invest heavily in equipment.
It was a game changer for them. They used the AIA to invest in a brand new, custom-built bungee platform.
Not only did that make things safer,
but it also let them deduct a big chunk of that cost from their profits.
Which obviously brought their tax bill down significantly.
Exactly. It's a perfect example of how, smart investments can actually lead to both, like operational improvements and tax savings.
Win-win.
And the best part, they took those tax savings and plowed them right back into marketing.
Smart move.
Which led to a surge in bookings, more jumps, more profits. It's like a positive feedback loop.
Absolutely. Growth fueled by smart financial decisions.
All right, next up, we've got Skyfall Bungee.
Oh, yeah, I've heard of them. They're known for being really innovative, especially with safety.
They're always pushing the envelope. They actually developed this state-of-the-art harness system, uses advanced materials and sensors to make the jump safer and more comfortable for the jumpers.
Sounds pretty high-tech.
It is, and here's where it gets really interesting. They applied for, and actually received, R&D tax relief for that innovative harness system.
Which, again, significantly reduced their corporation tax burden.
The government really does want to support companies that are investing in research and development, especially when it comes to safety.
Makes sense. It benefits everyone.
And Skyfall Bungee, they didn't stop there. They used those tax savings to hire more staff, expand their training programs, and invest in even more cutting-edge safety tech.
It's a ripple effect.
Those tax incentives can really fuel innovation and lead to a whole bunch of positive outcomes. That's pretty amazing.
It is.
These stories really highlight how understanding and utilizing tax strategies can make a huge difference for your business, especially a bungee jumping business.
It's about taking those tax challenges and flipping them into opportunities for growth, for innovation, for success.
Couldn't have said it better myself. Now, before we wrap up this deep dive, one last thought I want to leave you with. We've been focusing on the UK tax system here. But remember, the core principles of tax planning, they're pretty much universal.
They apply everywhere.
So let's say your bungee business takes off, and you're thinking about expanding internationally. Maybe setting up shop in, oh, I don't know, New Zealand, Costa Rica, somewhere exotic.
Sounds adventurous.
Well, just remember, tax laws can be vastly different from country to country.
Oh, absolutely. What works in the UK might not fly somewhere else.
So do your research, get some local advice, make sure you're operating legally and efficiently wherever you decide to land.
Don't want any nasty tax surprises.
Exactly. All right, folks, that wraps up our deep dive into corporation tax for UK bungee companies. I hope you found it informative, insightful, and hey, maybe even a little bit exciting.
Remember, knowledge is power. And now you've got the tools you need to make smart decisions for your bungee business.
So stay safe, stay informed, and keep on jumping.